Very good morning to our listeners. Hope you all had a fantastic weekend. A quick look at the major news from yesterday, that being the German elections, where Angela Merkel has romped to a third term now as the position of German Chancellor. Her party, the CDU and CSU, gaining 41.5% of the provisionary exit polls, giving her just shy of an outright majority. What this means then is she'll no longer be able to continue her previous coalition with the FDP, as they actually failed to garner the 5% threshold needed to remain in the Bundestag. The most likely scenario, according to economists, is that she'll have to reach out to form new alliances, potentially with the main opposition party, that being of the SPD, who gained roughly around 25% of the overall vote. In terms of a timeline then of things to look out for in that regard, historically, in terms of forming German coalitions, it takes roughly around 1 to 3-4 weeks, so it could not be an immediate thing which we'll see in the next few days, more so a drawn-out political debate that we'll see from various officials as they look to team up with each other going forward. In terms of how this has been received then, so far, the idea of continuity, having seen Merkel, one of the very few survivors of key political powers that remained in place since the financial crisis, has been quite well received by the markets. The euro did gap up at the open in Asia, but some of those gains have pared slightly as the session has progressed so far in the open in European trade. Taking a quick look elsewhere, we've had the release of the Chinese manufacturing PMI overnight in the Asian session. That did buoy the Shanghai Composite Stock Index, which outperformed its peers after the reading itself came in at a 6-month high. New export orders also came in at a 10-month high, suggesting further stabilisation of the Chinese economy in expansionary territory as well. And going forward, a couple of things to keep an eye on. Continue return to normality somewhat in production levels in Libya, given some of their civil unrest there and the various protesting that we've seen. As such, could well potentially weigh on crude prices. And then we've also got a slew of Fed speakers throughout the week, which does come on the coattails of Bullard's comments, which did move the Treasury market on Friday after he said that it was a very close debate on whether or not they were going to trim or begin their tapering in September, and also the fact that October could be a very live meeting. So Fed hand-holding could well be one of the main things in which we see as they look to outline their timeline for when exactly they will commence tapering. But again, given the fact that we have a lot of the fiscal debate with the debt ceiling coming back into focus in Congress this week, could well push back some of those timelines to be as imminent as October, more so to what most of the major banks are calling for tapering to begin in the month of December of 2013. That just gives you a couple of summary stories though to keep an eye on for this week. I wish you all the best for the next 5 trading sessions, and that's all from me for the time being. Thank you.